Good afternoon and welcome to the Wall Street Crossover Show on TIP TV. And as usual, we have Darren Sinden, market commentator at Admiral Markets, to run through the markets.
Good afternoon, Zach, and thanks for having me once again. Right.
Possibly not the most supercharged session of the year so far. But
no, it's very much got that Friday feeling to it. It's been a quiet week as far as economic data points have been anyway, and today there's it's no different really. Okay. But we picked out a couple of bits to look at. So starting first with something that came out before the European session opened, Japanese industrial production for April. This is a month-on-month figure, and it's slightly better, came in at 1.2% ahead of a forecast of 1%. We're still sceptical about the recovery in Japan and the effects of QE. Nonetheless, though, there's a positive note for them. And if you look at if you've got access to it, look at the economic surprise index for Japan. It is actually trending higher, and it would have done so again on the back of that. We also had some Spanish inflation data, the HICP number. This is the European Central Bank's preferred measure of inflation. Again, this is a figure for May, month on month. Came in at 0.4%. That's versus the forecast of 0.4%. The prior read of plus 0.7. So there is some semblance of inflation in the Spanish economy, but it's actually lower than it was in April, so still a very mixed picture there. And then a European-wide figure, or Eurozone-wide figure, the industrial production number for April, again a month-on-month figure, initially came in at plus 0.1%, so very modest growth there. The year-on-year number looking slightly better at plus 0.3%. Sorry, I'll start that again. The month-on-month figure for April up 0.1% versus the forecast of 0.3%, my apologies. And the year-on-year figure up 0.8% with a forecast of plus 1.1. So in fact, worse than was anticipated, and you know, more food for thought from
There's still a long way to go on that.
Yeah, and with numbers like that, you can see QE running out to September 2016 without too much of a problem at all.
2020, the way we're going.
Well, anyway. Possibly. In terms of movers in the London market today, I've come back to Royal Mail. Actually, we touched on this one yesterday. Back up, you might remember there was a placing of government stock yesterday at £5. The stocks rallied modestly this morning to 505p, so it's up around 2.5%. The reason for that, JP Morgan have upgraded, interestingly, with a new target price of 6.15 from the previous one of 5.05. I find it quite...
Who's conducting the placing?
Brokers, I'm not sure, but I thought
it was them. Anyway, but maybe. Well, I think they. If it's this, maybe totally wrong, but I think someone did upgrade Royal Mail just ahead of the news that there would be a placing. But I think it was the people who were involved in the placing, but obviously they didn't know that.
No, Chinese walls.
Chinese walls, exactly.
Yeah, exactly. And then the other stock on the screen here, BWin Party Digital, as we must call it now, BPTY, the ticker here in London, 96.4p, down 8.2%, and had been down by as much as 11.25% this morning. And the simple reason is that two of the major shareholders appear to be bailing out of a large chunk of their holding. They're selling up to 50 million shares, or around 6% of the company. Not unusual for people to cash in, but unusual for people to cash in when the stock's supposedly in bid talks. So a lot of people questioning the timing and what's really behind those.
Well, I think there was one idea that Playtech would be possibly interested in, I think, in BWin. So maybe as Playtech are going to go for a plus 500, that sort of upset some of the major shareholders.
That could well be the case, Zach. I'm sure there'll be more comments about this in the weekend press, so keep your eyes peeled for that.
Okay.
If we move on to the next slide. M&A rumours and movers. Railways are the sector in focus today. CSX Corp, CSX US is the ticker there. Rumours of a merger with Canadian Pacific, which is ticker CP in the US. So these are stories that were doing the rounds in October last year. The Canadian group approached CSX, so they were rebuffed, but the story came back to life yesterday. CSX stock rose by 3% in normal trading yesterday. Just to give some background to this, CSX is the number 3 railway operator in the US by market cap, and Canadian Pacific the number 5. By that measure, if the group were to merge, it would create a company worth around $60 billion, put it into the number 1 spot. US regulators, though, may not look kindly on the deal. There's a long history of antitrust legislation against railway oligopoly, shall we say, in the US. And the truth is, though, it probably would be beneficial to the US economy if there was some consolidation in this sector. But as I say, there'd be that clash between economics and competition policy there. Why would people be interested in the railway business as a whole? Well, it is an important method of transportation. If for freight here we're talking about, it's not really a passenger business at all, it's all about freight. But if we look, Berkshire Hathaway, aka Warren Buffett, bought a rival network, BNSF, in 2009 for around $26.5 billion. Since then, they've been able to take out more than $15 billion in dividends, so it's nearly paying for itself.
Brilliant investment.
Yeah, fantastic, and obviously he'll have seen a capital uplift as well in the value. So it is a sector that can generate huge amounts of cash. So it wouldn't surprise me if somebody tries to force one of these deals through. Let's see what the regulators have to say as and when it happens.
Okay, and we move on to the US data points.
Very thin on the ground, I'm afraid, today, as far as US data is concerned. We've got the University of Michigan consumer sentiment number for June. The forecast here is a read of 91.2, slightly better than last month's 90.7 if it comes in there. This has been trending higher, this indicator, since the low 80 reads in summer 2014, so we'll see if we can continue that trend today. And then the only other real data on the table is the Bureau of Labour Studies, PPI, the Producer Price Index for May, the month-on-month number again. The forecast is for plus 0.4 versus a prior read of minus 0.4. I have to say, though, that most people don't look at this number. It's the ISM number that they prefer to watch in modern markets. But nonetheless, on a thin day, it's probably worth having half an eye on that.
Okay, all right. And to finish off the levels?
Okay, well, a couple of interesting pre-market movers. First of all, Twitter, $37.60, up around 4.94%. The CEO, Mr. Costello, is resigning. He's going to be replaced by Jack Dorsey, one of the co-founders of the company. The market seems to have taken that to heart. The other stock that's moved nicely this morning is T-Mobile. That's ticker TMUS, around $40.24, up about 5.5%. And it's quite straightforward. The reason for this: Dish Networks are said to be lining up financing between $10 and $15 billion to potentially bid for T-Mobile US.
And mobile telecoms very much in focus, especially obviously over here with our friends at Vodafone, still in focus.
Yes, absolutely.
It's a hot area. Something's going to happen, isn't it? Really?
Yeah. Then there'll be more than one deal when these things get done. In terms of levels to watch today, a little bit easier for choice in European equities. So in the FTSE, we've gone with 6,800, bit of round number psychology there, and 6,850 to the upside. To the downside in the DAX, we're looking for 11,250, but it's whipsawing around today. It really is a pretty volatile session on thin volume. To the upside, we'll look for 11,365. And looking at US equities, I've gone back to 2100 as my downside level to watch in the S&P, with 2115, which just above yesterday's high, as the new level to look for a breakout to the upside. And in the Dow, 17,950 to the downside and 18,115 on the upside. But both of those really still searching for a proper directional cue, and I suspect.
Well, we're sort of back to where we were just before the non-farm payroll.
Yes, basically.
And on the currencies?
Well, currencies, euro's weakened slightly, so we're now 111.70 on the downside as far as that's concerned against the dollar, and 112.14 on the upside. Aussie dollar, US dollar, 76.74 is our downside level at the moment, and 77.23 is the area to watch on the upside. Dollar yen, 123.50, plays 124.10. That's tightened up a little bit. I suspect the bias is for a weaker yen still there. And in terms of cable, 154.80, plays 155.20. Thinking that could spike higher, probably a last hurrah before a further sell-off would be my guess there.
Okay, well, it's pretty comprehensive. That completes the Wall Street Crossover Show with Darren Sinden, market commentator at Admiral Markets. And we'll be back for more next week.
Thank you very much, Zach.
See you later.